Hello everybody and welcome to Greenstar Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's coming up on 20 minutes to 1 PM on Saturday the 13th of March 2021 and we're going to spend the next few minutes looking at silver. Right, we're going to start as we always do on this channel with our basic analysis first, Elliott wave analysis second. So a quick rundown of the chart if you're new to the channel. We have our Elliott wave count up on the chart here, which is all our numbers and letters. Let's just shift those out of the way for the moment. We have 4 exponential moving averages on the chart, a 10 in yellow, 20 in blue, 60 in orange and 250 in green. We have a volume profile here on the right hand side with a built-in point of control, which is a yellow dashed line representing the peak of the buy and sell volume. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 short-term moving average, 20 for the long and a 9 to smooth. Right, what can we see here on the weekly time frame? Well, we can see a battle that's been going on for weeks and weeks and weeks and weeks. We've seen the 20 exponential moving average acting as incredible support, but I believe it will break sooner or later. We've had a wick through it on the 21st of September, a wick through it on the 26th of October, a wick through it on the 9th of November, a body below it on the 23rd of November, a body above it on the 30th of November, a wick through it on the 7th of December, a wick through it on the 14th of December, a test of it on the 4th of January, a wick through it on the 25th of January, and a body below it on the 1st of March and a body above it on the 8th of March. So essentially this 20 exponential moving average is where all the price action is, and the bulls are just being really bloody stubborn and are not letting me buy silver at a cheaper price. Why are you doing this to me, guys? What have I done to you? Did I wrong you in a previous life? Come on. I just want to buy it cheaper, please. Well, you can buy it cheaper too. Then we can all go to the moon together and all be happy. Stop being so bloody stubborn and just let it break down, please. Anyway, getting back to reality for a moment. Above 20 exponential moving average, below the 10, still above the 60, still above the 250. RSI back into neutral territory, just flatlining, just hanging around there. Momentum dying off in the MACD as well, swinging to bearish momentum, tiny swing back into bullish, tiny swing back into bearish. Are we finally going to break down? We've got a bearish crossover but no confirmation as of yet. We've seen this several times in this correction already. So daytime frame, let's come down and take a look. Right, we are below the 10, 20 and 60 exponential moving averages, with 10 crossing through the 60 with the price below it. Not quite the death cross we look for on this channel with the 20 through the 60 with the price below it, but that could happen any day now. Still above the 250, came down to oversold territory on the RSI, didn't quite get through it, back into neutral territory. Little burst of bearish momentum here with a sell signal on the MACD on the time frame for this move down here, which is a 5-wave structure. I'll show you that in the Elliott wave count in a minute. Dying off a bearish momentum, but no bullish cross or bullish buy signal here to support buying this recent dip. So Elliott wave count time, let's bring it up and see what we're doing, and let's full screen the chart. So I have us completing a primary wave 1 back here, working on the primary wave 2 for silver, a full leg, one full leg behind gold in the bull market. So gold's already gone through its high, silver hasn't, and I have us as a full leg behind and lagging gold. Now why is that? I don't tend to discuss fundamentals on this channel, but I'll make an exception here. Gold lags, silver lags gold, always does. Why is that? Gold is gold. I mean, gold's gold. Good as gold. The gold standard of this, gold card that, blah blah blah. Gold's the basis of our monetary systems for 5,000 years. There are people out there who say stupid asinine stuff like, oh, gold's just a yellow rock. Shut the hell up. Alright? Everything's made out of carbon. Does that make it useless? Come on. Guys, gold is not just some yellow rock. Gold is gold, and its gold is for a reason. It's not just because it's number 72 on the periodic table and it's perfect sound money. Okay? You can fall out with gold in the short term if you like and say it's no longer useful, but you are one lifespan of 70, 80 years out of 5,000 years of human civilization. You don't get to argue with gold, so just shut the hell up, please. I don't want to hear it. Now, if you disagree, that's fine, but you're not even thinking straight. Well, you don't even understand gold if you're not thinking in that regard. So why do people buy gold first? It's gold. It's the safest place to go, right? But by the time the average Joe gets here, it's freaking way too expensive, and they're like, shit, I can't even buy an ounce of this stuff. I can't buy gold. Well, what else is there? What other monetary metals are there? Well, there's only one historically with any application as actual usable, exchangeable, fungible, divisible unit of account, and that's silver. And the people go, oh my god, look at silver, it's so cheap. Oh my god, it's so cheap next to gold, it's barely moved. Then silver catches up. That's why it's lagging. You go to gold first, gold gets too expensive, you go to silver. It's not uncommon to see this everywhere else. Bitcoin first, Litecoin and Ethereum and all the others next. Digital gold, digital silver, that's how it's been marketed. And it's psychologically, it's been proven to be working. People's brains are wired to think gold, then silver. Whether it's digital gold and digital silver or real gold and real silver, that's how our brains are wired to work. That's how we look for value and that's how we look for safety. Right, and the same's true to some degree in the stock market. Big name, big company, blue chip, then the other stuff. Whatever. You see the point I'm getting at here. So I have us behind gold in the bull market. So that's fundamental discussion over with. Let's move back to the technicals. I have us in an ABC. Like this. 3 waves down. ABC. Series of 3 wave structures in our W here. So we go bump, 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 3 waves, dun, 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 3 waves, dun, 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 3 waves. W, X, Y into our B for our B wave on the primary time frame. Well, sorry, this should be labelled intermediate, excuse me. There we go, and then now we've got 5 waves down in a C. That's what I'm looking for. I could be wrong, but it's counting really neatly at the moment. I like the look of it. Like I said, this support just feels like it's just got to give up at some point, sooner or later. So let's zoom in and have a look at the closer time frame. And alter the chart, see what we can see. So, what have I got since topping out? We had this breakaway high, and then we came down in a 1, 2, 3, 4, 5. I'm sure on this time frame, yes, there's big gaps in the chart. It's silver, it's volatile. 1, 2, 3, 4, 5 here, into the 5, into the 1, A, B, C, into a 2, right, and then we've got a 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 5 waves in the 5 here. So 5 waves down into a 1. Looking for an ABC. 1, 2, 3, 4, 5. 5, 3, 5. Excuse that for a moment. Into a 2, let's say. And then a continuation into a wave 3. Down. So there's an argument to say this is a zigzag, right? There's an argument to say that if you're counting the overall correction differently to how I'm counting it, there's an argument to say that this is 5, 3, 5, zigzag complete, and off we go. Well, fair enough. All you got to do is take out this pivot at 26.28 and you can have that bullish conviction. Hunky dory. We want to see 1, 2, 3, 4, 5 waves up, take out this pivot, off we go, 3 waves back, 5 waves again, and off we go higher. So yes, there is potential for this to be a zigzag, and the previous way I've measured this correction to be incorrect. This would have to be some kind of diagonal up to this high for this to be a ABC down into a 2 or 3 into a 4. I don't know how you'd have to count it. I haven't tried to count it that way. I'm happy with the bearish interpretation for the short term. So on that note, wave 1 down, 2, 3, 4, 5 to come, into minor 3, into minor 4, down to minor 5, into C, into 2, somewhere maybe back around $17.50, somewhere around there. I mean, let's just zoom out for a minute and let the chart calm the hell down. It's got a bit mental. Daytime frame. Oh, I thought he stuck there for a minute. I don't know what it is. I've got a good, internet service ISP, but I've been having trouble the last few days. We had a power cut here last night. Walking around with a head torch on for 3 hours. Right then, so let's have a quick look. We're looking for primary wave 1 retracement. Okay, after a multi-year correction. So primary wave 1 retracement. What have I got? Yeah, so I just set it at the 61.8. A little ambitious, perhaps, in amongst all this volume here, but there's no reason why we can't find it at the 50. Nothing here to suggest we'll find support, but strangely enough, when we get these peaks can be support, but these troughs of untested, no market acceptance of this price, you can just get random bids in here, and they can be violent sometimes, and you can just reverse like crazy. So you've got 38.2 potential for a shallow 2, that's at $21. You got the 50 at 19 bucks 18. That would be a pretty standard wave 2, and you got a deeper wave 2 at 61.8 at 17 bucks 21. So like I said earlier, come on guys, who doesn't want to buy silver cheaper? Let's not get in our own way here. Alright then, that's it. So if you're new to the channel and you like what you're seeing here, please please subscribe, smash the like button, let us know what you think in the comment section below. And take care, I'll be back with you shortly. All the best. Bye bye.